All right, there we go. Everything looking good. We are live. Let's go ahead and get this stream started. Happy Friday, everybody. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 11 a.m. Eastern Standard Time on October 14th, 2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okie dokie. Let's go ahead and get this stream started. Somebody in the comments, let me know everything's coming through loud and clear. But in the meantime, so we got our next series of data points, our inflation data. We had the CPI obviously came in hot. The market expectation or analyst expectation was 8.1%. Previous month was 8.3%. And we came in between, which was 8.2%. And I did say that I was expecting around 8.1%, but I wouldn't be surprised anywhere up to 8.5%. So give or take, basically, 2 points from the last reading, which we did. We fell right in that range, 1 point below the last reading. So again, what we saw was 8.5, then 8.3, then 8.2. So and before that it was 9. So we peaked inflation data, technically, as of now. We have peaked, technically. As in, we put in a high and we have not yet taken out that high. But we're literally still at the highs. And now, good thing is, inflation has come down slightly. The bad thing is, the rate of inflation coming down is decreasing. So initially it was whatever, 9.1, I think it was. And then or 9.3, I can't remember. It was 9 point something. And then it came down to the 8.5, then 8.3, then 8.2. So the rate of change is slowing of the decrease. And that's not what we want. You know, the idea is that something peaks and then it starts to come down and accelerates back towards normalcy or normality or some other normal word. So that's not good. Technically, inflation came down though. Core CPI came in higher than expected. Month over month inflation, according to Biden, has been 0 in the past. It was not 0 this time. So it did go up, unfortunately. So yeah, I mean, nothing has really changed. The rally in the markets was exactly like we talked about. Regardless of if you're right about the CPI data, whether you're exactly dead on, whether you're within a, point like myself, it doesn't matter. It doesn't matter because you don't know what the market's going to do. Because everybody that, sold got completely wrecked, and everybody that bought got completely wrecked because we basically saw a massive squeeze. I mean, they squeezed all the longs with a big move down, and then they squeezed all the shorts with a big move back up. The real question is it sticky? Not the inflation, not the CPI, none of that. I'm talking about, is any of this price movement sticky? Because the truth is, probably not. I fully expect us to just give back everything that we gain, everything that we lose, and then after that, the market can actually decide where it wants to go. And that's the thing about playing things like earnings or, some specific data point or some specific event, something like that. You're basically trading news. So if you don't have an advantage over the markets, why are you trading news? Because the whole idea is to take shots when we have an over 50% chance of success. We want a higher probability of success than 50%. Otherwise, we're just gambling. We're just, flipping a coin. So if you don't have a edge on something like CPI data or core inflation or earnings or some news event, then you shouldn't be trading it. It's okay if you're already in a trade based on something else. It's okay if you're not in a trade based on something else. But you shouldn't be trading specifically around events and news and stuff like that. Because the fact is, you will get wrecked over time. You will get wrecked. Because the truth is, we've seen it a infinite amount of times in these markets where something moves in advance. No one knows why it moved. And then suddenly, a couple weeks later, or a couple days later, or whatever, the quote unquote news comes out and it's like, oh, Cameco just dropped 15% today when they announced a, merger and acquisition of another company. And coincidentally, the entire rest of the uranium market has been selling off and looked substantially weaker, but Cameco didn't. So is that just completely random, or is that, some form of insider trading or something like that? It's obviously some form of, quote unquote insider trading. I'm not saying it's illegal. I'm not even speculating that there was any foul play. I'm just saying that clearly there's people who have information before we do. The same way, if all of a sudden there was a news article and it was like, U.S. declares war on whatever. By the time you hear about that, it's already priced in, because before it's ever released into like public, mainstream, whatever, it's already made its way through, important chains. So if you try to trade these events and stuff like that, you should be like counter trading them, in my opinion, buying the rumor and selling the news. Buy something when you hear about it initially, when there's talks about it or whatever, and then sell when the actual event takes place. Like, your Tesla battery day, or, your earnings day or whatever. Now, obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. There's no way anyone could have anticipated what was going to happen there. You're like, oh, we're going to sell off in advance to the CPI print. CPI print's going to come in extremely, extremely hot, but it's going to be down slightly from the previous month. It's going to be up, from the previous month. It's going to be up month over month compared to the previous month. Core CPI is going to be at an all-time high or cycle high. And then the market is going to sell off a couple percentage on a gap down prior to open, and then suddenly pump up, 3% back to the upside. Like, there's no way anybody could have guessed that. I mean, you could have guessed it, I'm sure, but not with any like advantage or anything like that. So, in my opinion, events like that, if you're already in a trade or whatever, you're already out of a trade, that's fine. But I don't really base my actual trades on what I think is going to happen necessarily. So, and do I think this recent move will be sticky? No, I think it will be a complete rejection in crypto and literally everything else that moved on it. Do I think the dollar has topped, like everyone is saying? No, I do not. Do I think the yields have topped? No, I do not. As a matter of fact, yesterday they literally put in a new cycle high, and right now they're currently at a new high. There was a wick up yesterday, so. So let's take a look at our actual data points, jump right in and see what's coming here. So this was obviously a big data point, one we've been waiting on. And the truth is, the recent action in the stock market, and, here's the thing that people don't realize. Everybody's waiting for this big Fed pivot, but when the big Fed pivot happens, it's going to happen. And then afterwards, the world is really bad. It's like right now, everybody is afraid of this big car crash, okay? So they're like, oh, we know everybody's going to get in this car crash. The market's going to crash. It's going to happen. So everybody's anxious and waiting for it to happen. And then suddenly it's going to happen. Eventually we're going to get in a car crash, okay? And we're going to be bleeding from the ears and like can't hear anything, can't really see. We're stunned, probably have a concussion. And then that's when everybody's going to get bullish. When the actual crash happens, when the pivot happens, that's when everybody's going to get bullish. The reason the Fed would pivot, which they're not going to anytime soon, if they were going to pivot, it means literally either the United States economy / markets are completely falling apart, or the entire world's economy / markets are completely falling apart. So that's the car crash, okay? The Fed pivot, the car crash, is not a good thing. So we might see a reaction rally in the markets. I'm sure we will. When and if they slow the rate cuts, decrease the rate cuts, stop the rate cuts altogether, pivot. There's lots of versions of what, an official pivot is technically when they go from rises to cuts. You could argue if they go from 75 multiple times in a row and then they go to 50, that's at least the beginning of a pivot. Now the difference is, are we pivoting from QE and QT? That's the way I look at it. So we talk about like the, the light switch, and there's either an on and an off. And then there's also like those kind of dimmer light switches. I look at it more as like a dimmer light switch, or one that has a level. QT to the nth degree is literally what's going on right now. Like, we're record QT going on, quantitative tightening. I mean, it's ridiculous. Like, it's insane. Like nothing we've ever seen before. The intensity of the rate hikes, the level that the rates are reaching, the amount of, basically like stuff rolling off the Fed's balance sheet. I mean, we're talking about something we've never seen before, and it's worldwide also. It's not just one country doing it. It's all over. I mean, some more than others, obviously, which is reflected in the currency strength or weakness. But the fact of the matter is, we have massive QT going on. So if we just suddenly go from maximum QT all the way at the top, and then down here is maximum QE all the way at the bottom, zero rates and massive bond buying programs like we had not that long ago. So we have maximum peak, we have maximum trough, and then in between we have a bunch of different levels. It's like, hey, maybe we're only hiking 50 basis points. Maybe we're only hiking 25 basis points. Maybe there's no hikes right now and we're going to kind of wait. Maybe we could cut 25. Maybe we cut 50. Maybe we cut a whole point. Maybe we go straight to zero. And then along that whole quantitative easing to quantitative tightening, range we have as well. Also, we have, bond buying, mortgage-backed security buying, or, bond selling, quote unquote, mortgage-backed security selling, quote unquote. So the only way we could be doing anything more intense on that level is if we either start actually selling instead of just letting these assets mature off the Fed's balance sheet, which they've said that they're considering doing and could possibly do in the future. So that would be more QT, quantitative tightening, or they could raise rates by more than 75 basis points. But that's it. We're at like maximum QT right now. And like if we keep going higher, that's fine. We're just going to like new all-time highs of quantitative tightening. So sure, if we go to 50 basis points or if we don't hike at one meeting, that's technically less aggressive. It's less quantitative tightening taking place, but we're still in the process of quantitative tightening. So until we essentially get to an area where we're essentially quote unquote neutral, which the Fed is saying essentially right now, we're around that neutral rate we can't even begin to think that the markets are bottoming. And the idea that it's like, oh, well, the markets are sniffing out what's going to happen in advance. So what's really going to happen is we're going to hit 5%, Fed funds rate sometime mid next year or like in the first quarter or second quarter of next year. Therefore, the market is going to price in advance 6 months ahead of time, the bottom in the markets before the actual bottom in the economy, before the pivot, get the fuck out of here with that bullshit. Anybody trying to plan stuff out like that and say, well, historically speaking, the market bottoms 6 months in advance of the actual economy. So according to that, if the maximum rate that we'll reach is going to be somewhere around March or April of 2023. Therefore, the market has already bottomed, so buy the dip. That's fucking moronic. The same people have been saying the whole entire way down that, we had reached those levels. So just be very, very careful, who you're listening to, who you're trusting, and where they're getting their knowledge from. Because, I've said it many times. You want one of these statistics that's never happened before in all of existence? Send me a crypto donation and let me know when you need it by, and I'll have a brand new statistic that nobody's ever talked about before, that's never failed before in the past ever, with zero guarantees that it will continue to not fail going into the future. It's an absolute joke. Anybody can look back and do technical analysis or look back and find something that's never happened before. It has nothing to do with what's going to happen in the future. So that being said, TNX up here over 4%, 4.00011% at new highs, literally above the previous peak high, which obviously they said was the top. They said this was the top, that was the top, that was the top, that was the top, that was the top. And now here we are at 4%. You guys know what my target is, 5%, and I'm already hearing the whispers. I'm hearing it over and over again now. We're going to be at 5% before long. 5%, 5%. And what did I say? 5% was unheard of. Literally no one on planet Earth was talking about 5%. And now here everybody's starting to talk about 5%. So get ready for it. It's coming. We know that's the next key level. We know exactly what 5% is on the TNX. So most important chart. The reason we spend so much time looking at TNX and DXY all the damn time, every time, first stream, is they're just so important. We hit the 618. We found resistance. We're trying to get above it. If we close above that red 618, if we close above that, we are likely headed up here to the 786 of the macro. And this is from the all-time high, Paul Levy back in the 1980s, down to the all-time low, Rona dump. So that's our fib here in red. We're at the 618. So the next target to the upside based on fibs, if we keep going, is 7.29%. And you're like, this is bullshit. You were talking about 5% when we were at 1%, and now you're talking about 7% and we're at 4%. Get your shit right. Well, we do it in steps. You know, I'm not going to sit here and say, hey, we're going to 7%. People think I'm crazy. So I say, hey, we're going to 5%. And people are like, yeah, right, you're crazy. And I'm like, am I though? And then when we're on our way to 5%, then we start looking at the potential next target to the upside. And everybody knows the 5% comes from our previous like 2000 and roughly like 6 area right here. We have like this 5.23%, you know, peak here. So we'll see what happens. You know, that's our next target to the upside. We're almost there now. We're almost at 5%. So does it seem likely we're going to go the rest of the way? No, it's impossible. We ever going to get to 7%? No, it's impossible. We'll never get to 7%. The governments can't pay their debt at 7%. You moron. The government has $31 trillion in debt. Do you understand how much it costs for them to service their debt? And it's not like they have a giant money printer that they can just make up money with and then, you know, have the Federal Reserve buy that money and then pay off the debt with the money. I mean, get the fuck out of here. Like, it's one or the other. We're either printing money worldwide, and that's why there's inflation, but countries are definitely printing money, so they should be able to service their debt. If you have a money printer, okay, if we're playing Monopoly, let's say, and I'm the, you know, one of the players, maybe I'm operating the bank or whatever, and I'm playing too, and, you know, there's no more money in the bank, so I can just write you an IOU, which is basically what we do. We fund everything with IOUs. When there's a deficit between what we take in from taxes and what we spend with wasteful government spending and a tiny bit of useful government spending, when there's a deficit, which there is all the time, worldwide, in most countries, that deficit needs to be made up somehow. So it either needs to be, you know, paid off from deflation, like devaluing that actual debt, or it needs to be, you know, financialized, which is basically what the Federal Reserve does. So the reason the Federal Reserve's balance sheet is so big is because we run massive deficits and the Federal Reserve makes up the difference. So if, man, I've gotten into this so many times, but it's nonstop misinformation, not because people are like going out of their way to say things wrong. They're just fucking dumb and they're just repeating what they heard. The way it works between the Federal Reserve and the Treasury is, you know, the Treasury's like, oh, we don't have enough money and, you know, we got to spend it. And they're like, instead of cutting back on our spending, we'll put more on the country's credit card. So the Treasury, Janet Yellen, racks up more debt, gets financialized by the Federal Reserve buying that debt, buying those bonds, and then they spend that money, they owe back the money for the bonds. And now everybody's like, oh, the interest, they'll never be able to pay it. The U.S. is bankrupt. Oh, God, they're garbage and the dollar's useless. What people don't realize, because they're retards or morons either way, or they're just ignorant by choice, I don't know, probably just dumb fucks. What they don't realize is that the Federal Reserve has a cap on how much money they're allowed to keep, because they're not a government organization. They're a private owned, you know, corporation, company, whatever you want to call them, entity. They have a cap on how much money they're allowed to keep from the interest payments. So they pay all of their staffers, all of their shit. They keep their little percentage. It's like 5% or something ridiculous. And then they take the rest of the debt money, the interest that we just paid to them, that everybody's afraid that we can't pay because we don't have enough money and the interest rates are too high. They take the rest of that interest after they pay their bills and take their cut. And then where does it go? Right back to the fucking Treasury. Janet Yellen gets the money back. Oh my God. So we're like, oh my God, we're going from $300 billion to service our debt up to $1 trillion. This is insane. And oh my God. And then realistically, what actually happens, the extra $700 billion goes to the Fed. The Fed keeps $35 billion of that. And then the extra $665 billion goes back to the Treasury. So is the extra $35 billion enough to bankrupt us? Because if it's not, who gives a fuck? Oh, it's not? Okay. So, game, set, match. People are fucking stupid. And you can find all this information on your own if you don't believe me. So anyway, all the bullshit, all the narrative that everybody's been talking about, how they can't pay their debts and blah, blah, it's all bullshit. Okay? 1. And 2, countries don't just come out and buy overnight, debt. Like most of their debt is like shorter term for sure, but they're not like coming out and issuing, 15-minute treasuries. And they're like, oh God, we're in trouble. Like if you lock in a bunch of debt at 0%, 1%, 2%, 3%, 4%, and then it goes to 20%, who gives a shit if you don't have to go out and take more debt? Which is why I said a long time ago, hey, here, I literally dispelled the rumor that a country would not be able to pay their debts if the interest rates go too high. And it was the easiest thing ever. We issue the Freedom War bond of, the 21st century or whatever you want to call it. Something just sounds amazing, like the freedom, love of America, equity for everyone bond. Okay. And we just make a 50-year bond and we issue it at 1%, 2%, whatever the fuck we want for as much as we want. Oh, it's going to be $50 trillion. Okay. It's like, well, you can't do that. That's crazy. Okay. Are you sure? It's just ridiculous. So anyway, it's all BS. There's no truth to any of it. I mean, sure. Yeah, it is on paper. At a glance, it's like, oh my God, that's crazy. We're going to take in $1.5 trillion in taxes, and then we're going to pay $500 billion or $1 trillion or $1.5 trillion to service the debt. I mean, it sounds bad, but keep in mind, this isn't a person. This isn't like just a little entity. This is the fucking U.S. government. But anyway, that's enough on that. You guys all get the point, I'm sure. Rates are going higher. We see that. We see it in real time. We're almost at 5%. We're headed to 5%. Been talking about 5% forever. It's a 1.236 Fibonacci extension from the low, from COVID peak, high to the low right here. 1.236 lines up almost perfectly with our 2006 price action right here. I'm going to 5%. I'll see you there. When we get there, everybody will be like, oh yeah, now we're at 5% and it's the peak again. Well, we'll see. Bunch of just dumbass people who have no idea what they're talking about, regurgitating the same shit over and over again. Wrong every day. So U.S. oil, again, we backtested the 200 exponential as discussed, and now it looks like a rejection for now. We are still on top of the 21. We still have momentum in our favor. We're still in the bullish control zone. We don't want to write this off just yet, but this is far from, just going back into a bull trend, in my opinion. And everybody's afraid of what OPEC's doing right now and everything. Think about what they're doing. They're curtailing supply. Why are they curtailing supply? To try to maintain the prices. So they shouldn't have to do that unless, because we know there's an inverse relationship between, supply and demand or supply and prices, etc. So if the prices go down, the demand goes up. If the prices go up, the demand goes down. Now, it's not necessarily like a one-to-one relationship always, because some demand is static, others is not. But the truth is, when it's all said and done, what is OPEC really doing? It's not like they're trying to drive oil prices through the roof. They're not trying to get oil prices to necessarily go higher than they just were. And I'm not defending what they do either. They're clearly a cartel. What OPEC is trying to do is maintain oil prices. So why do they need to lower supply in order to maintain prices? Well, clearly because lack of demand. If demand was the same, the prices would be the same with the same supply. But that's not what's happening. That's not what's happening. The prices are going down. So they're going to take away supply to make up for the lack of demand and hopefully keep the prices roughly where they're at right now, much more profitable than they've been previously. And you're like, well, oil was $30 and they were doing fine back then. Sure, they definitely were. And now it's 90. So could it go down? Yes. Could it go up? Yes. Are they profitable either way? Yes. But my point is, OPEC sees demand coming down and then continuing to come down into the future. So OPEC, the oil cartel of the universe, okay? At least of the planet. I don't know. There might be other oil cartels. I'm not sure. But at least of our planet, sees demand for oil coming down already and then continuing to come down into the future to the point where they need to cut supply just to maintain prices. So what does that mean? OPEC is sniffing out a recession. Or maybe it's already here. I don't know. I mean, there's less demand for sure. Maybe suddenly solar panels are just going to work. That could be it. So looking at our stock markets, let's take a look at the Dow Jones first. So we came down. We had already almost touched our green box area. And then, let's be real here, okay? I literally just draw these boxes at like rough areas and kind of put them wherever. It's a fluke that it literally decided to come down and like touch the tip of the green box. That's a fluke. Okay, this is close enough. It's the same thing. So we basically just put in a double bottom new low right here. So we have a new low, obviously, from the previous low right here. And we just did a little double bottom. Okay, everybody was like shocked and amazed. And this is a bull run now, right? Because we got this candle. But suddenly, like when we came down here and put in the low here, and then we got two candles in a row of equal or greater size that made a move to the upside that clearly got rejected and then retested the lows. So we literally just did the same thing we just did right here. We just did it in one day instead of two. And we sold off a little first and then we pumped. And that's what got everybody pumped up. Now we're in a bull market. That was the bottom. That was confirmation of the bottom. Because the aggressive buying, the turnaround. Or, I mean, it looked more like a squeeze to me. Oh, you shorted too late? You're fucked. Oh, you long too soon? You're fucked. Oh, you long too late? You're fucked. Oh, you shorted too soon? You're fucked. I mean, that's what this looks like to me. This just looks like everybody just got squeezed right here. I mean, because we still have the same low. We still have the same high. Nothing has changed. We didn't suddenly reclaim some important areas and now everything's okay. We didn't suddenly break down through support and now everything's fucked. We're in the exact same place we were before. Nothing has changed me. Arguably, maybe we pumped up a little in anticipation. Maybe we sold off a little in anticipation. When it's all said and done, I mean, where are we at? We're at the same spot. This is the low from before. We're still there. We're at the low. We had a little price action below it. We had a little price action above it. Nothing has changed. This is the Rona dump highs right here. A clear, very strong support. We have the 382 slightly below it. Nothing has changed on this chart whatsoever. Nothing has changed. When we flip over here and we look at our different time frames, we're going to be looking at the weeklies today, as obviously we're closing out the weekly. What is this? We came down, tested the 200, failed to put in a higher high, put in another lower high, failed to cross 821 to the upside, got rejected, came down, put in a lower low. Typically what happens after rejection. Broke through the 200 simple and exponential this time, back tested the 200 simple and exponential, got violently rejected last week. Came back up again, back tested it again. So far, a little rejection to the upside, a little rejection to the downside. But this to me looks like a big, thick indecision candle. We don't know where we're going. We pumped up a little bit. It's a bullish week so far. But when it's all said and done, we got rejected lower prices. We got rejected higher prices. And we're now below the 200 exponential. Technically above the 200 simple, but barely. So if we're below the 200, they're so close together at this point in time, I'm going to consider them 1 point. If we're below the 200s, it's very, very bearish on a weekly. If we're above the 200s, it's more bullish. We have a hard sell signal. We have a bunch of red histograms. We have a red slope line. We have everything pointing us to the downside. The only saving grace on this weekly chart right now, the only saving grace on this weekly chart right now is the 200 simple is basically flat. It hasn't quite turned bearish yet. Hasn't quite turned bearish yet. Is it possible we get a scenario like this where we test underneath them and then rally off of them? Sure. What are we missing for a V bottom? Well, we need fiscal and monetary stimulus. So we're nowhere near those. Not even fucking close. If we have a capitulation candle that takes us down, like 25% suddenly, could that change? Oh yeah, for sure. But, I mean, do we see that happening? Nope. We look at our monthly. What did we say at the beginning of this month? Would not be surprised to see we just broke down to a new low, to see a candle push back up and pump all the way back up to this previous support right here. So the estimated target before this happened was 30,750. The pump that took place this month took us up to 30,454. So we're about $300 away from the point that I was expecting us to push back to. So we have a support. We push back up off that support, run into resistance. Resistance rejects us violently. We come down, we break through the support, put in a new low, and then we then backtest our previous support as resistance, aka an SR flip. It acts as resistance, and then we see continuation to the downside. Likely. That part hasn't happened yet, but, you know, if you've been watching for any amount of time, judging by my track record, it's probably exactly what's about to happen. So we'll see. I mean, there's a bunch of green histograms here. We talked about how everything was at some key support levels. It wouldn't be crazy to see a bounce. Is it worth getting excited over a couple percentage? No, fuck no. I mean, anybody that got excited over this and was like, I knew it, it's the bottom. They're desperate. That's desperation. That's Kathy Wood, an open letter to my wallet. Why I lost everyone's money. Fucking dumb bitch. So SPY is next. S&P 500. Again, we put in a lower low on the S&P right here. Gap down below key support. Obviously, we have our key Fibonacci right here. So we have the 382. Perfect test. Gap down through it and then pump up above it. You know we're coming back down eventually. If we lose the 382, the target is 0.5. But obviously, you know, this is a strong support level right here. Now, keep in mind also, we do have the superimposed price action from 2008 right here. You can see like the little gray bars in the background. And we did something very similar to this right before the capitulation, basically. So when we look at the SPY on the longer time frames, when we get to the monthly, you'll see it a little more clearly what's going on. But essentially on the weekly right here, I mean, what did we do? The exact same thing. We broke down, hit the 200 exponential, pushed to the upside, got rejected, failed the bull cross on the 821 weekly, came back down. This time we made it to the 200 simple. Exactly as expected. The 382, exactly as expected. We talk about how we're approaching support on many assets, asset classes all over the place. It's not crazy to think that we would potentially get a bounce. The problem is that we have a trapdoor looming. The trapdoor is literally looming right now. So any bounce is going to be forever outpaced by the potential drop that is looming. I mean, the bounce would have to be, if we're expecting a breakdown from this area to take us to the next fib, which seems very likely, that's 324. A bounce from this level would have to take us back to the previous fib, which is 398, and we're at 361. So what, we're going to like coin toss it right now when it looks like we're getting ready to break to the downside? No, thank you. I don't know. I think people are getting a little impatient right now. Keep in mind, the market's job is to buck you from being right. Okay? If you're bearish and the market throws you around enough and makes you lose money or whatever, maybe you decide you're going to be bullish, or maybe you just get out of the trade or sit on the sideline for a little bit, and then the market moves in the direction that you were anticipating. So last month, S&P closed exactly at the 382. Again, what would we expect to happen? Obviously support off the 382. Seems like a very important area. When we look at the monthly right here, what does it look like? This exact sell-off takes us down basically to 200 exponential and 200 simple and a back test of the Rona lows. Does the S&P have to get there? No, but there's an awful lot of confluence. I don't love using, you know, random, unreliable tools or whatever, but when you see enough stuff pointing at confluence or whatever, it's worth paying attention to. You know, 382 is key support. This monthly candle right now is just looking like a doji. Just big indecision candle. Does that surprise you? Some people are bearish and others are bullish. Some people are buying and others are selling. Doesn't surprise me at all. We pay attention here. We do see some potential, you know, daily bullish divergence developing. You know, two green histograms here, and then obviously a higher low here and a lower low here on price action. That might have just been what already played out though. So. And then the Qs, triple Qs, looks a lot like the S&P basically. You know, it already came down, put in a new low, gap down below the, in this case, now keep in mind how much weaker this is. Here we're at the 0.5s. The S&P is at the 382. So we're an entire fib level lower than the S&P is. Very weak. Very weak. I mean, I know people want to get bullish here. Again, we see a little bit of bullish divergence. It's like, oh, this is it. This is the bottom. And everybody's trying to pick the bottom. It's not going to be the bottom. I promise you that. Because then everybody looks like a genius. All the people buy the exact bottom perfectly, and everybody looks like a genius. Yeah, that seems likely. That seems really likely. And right now, everybody, every time we sell off, is calling it the bottom. Have you ever seen any bear markets ever bottom when everybody was calling for the bottom? Even the COVID V bottom, everybody was saying it was going lower, blah, 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 all that. IWM, Russell 2000 ETF, again, came down here, retested the lows. In this case, we did not gap down through the lows, which is good. The Russell obviously has been very, very weak, but holding up pretty good since the recent price action. We're still at the 382 though, technically under it. So the highly likely target is the 0.5, 154. So again, absolutely nothing has changed. That's how you know how pathetically desperate these markets are getting, that we could literally dump to a new low and then pump up like 2 or 3% and people are excited and calling it the bottom. That's how desperate markets are. It's absolutely pathetic. That, you know what? That's typically a sign you see not long before capitulation. You see desperation, you see denial, then you see capitulation as people accept their fate, that they are losers. It's like financially, like bad investors, not like in a foot race. It could be quick. You don't know. XLE, energy. The last thing we want to see right here is lower high. So we pumped up here, tried to threaten this high, couldn't quite get there. It needs to consolidate and get higher. If it does, it's going to retest the previous cycle high. Could go either way still. It could go either way. We're in the bullish control zone. Still have bullish momentum. All green histograms. Blue slope line. 8 and 21 bull cross. The big warning sign is the 200 simple has crossed above the 200 exponential. There's a very high likelihood. After that happens, we go on to either retest the highs and put in a new high, or don't quite, but that after that, the trend rolls over and then we threaten a bear market. So we'll see what happens. Obviously, a lot of tailwinds still for energy. You know, if we see like heating oil or something like that start to take off, if we see oil start to pick back up or something like that, you know, right now, liquefied natural gas and, you know, well, just natural gas in general is, you know, holding up a lot of the energy market. We see weakness in, you know, nuclear uranium stocks. We see weakness in oil. We see weakness in a lot of these other things. The main one we're seeing strength in is still natural gas. So XTN, you know, and while we're talking about this is a good point also. A lot of, and I know I have an international audience, so please nobody take any offense to this, but, you know, maybe just look around and see if I'm right, because I am. But get ready. You ready? The people that are the most bullish on the U.S. and always hating on the dollar and the U.S. Fed and all this stuff, it seems like it's always like the same kind of like demographic. It's like, you know, a boomer dude from either Canada or UK or, you know, somewhere in Europe or whatever that's talking about how the U.S. is mad because OPEC won't do its bidding and lower gas prices. The U.S. doesn't care. We don't care. We're going to be fine. Okay. We were energy independent like 2 years ago under the Trumpy Trump, the orange man. Okay. So it's not going to be that hard to get back to that if we need to. Okay. It's not that hard for Biden and the retards in charge to reverse another one of their terrible policy decisions and decide that they're going to, you know, open back up the pipeline and, hey, we're back up, Canada, let's go. You know, finish the construction. And now all of a sudden we have almost a, what is it? I think it's close to 1 trillion barrels from Canada. It was like hundreds of billions of barrels of oil from Canada. So the idea that the U.S. is mad because OPEC won't lower prices so that Biden can get reelected or so that the U.S. can have cheaper gas prices. Our gas prices aren't even that bad. We're like $4 right now. Okay, it's not bad. $4. I mean, don't get me wrong. $2 is better. $1 is great, but $4 is not crazy. No one's like not able to buy food over $4. Okay, and rice is cheap too. So if you need to choose between, you know, buying fruit roll-ups and Big Macs or rice, easy decision, and you can save money. But my point is that it's not for us. Okay, so if everybody got their little like hopes and wishes and dreams, and like suddenly like, you know, the U.S. lost its like power grip and stopped worrying about the rest of the world or policing the rest of the world, just double check really quick. Just like, you know, maybe Google it or whatever. how many countries have like, you know, a real strong navy? Who has like a really good navy? Like one that could go across oceans, you know, possibly like escorting or guarding like big ships that are full of like, you know, containers and stuff and things that you want to sell to other countries. Does anybody have a big navy? Are there any big navies around that can just escort ships across oceans and just keep trade routes safe? Are there any around? You know, just in case everybody gets their wishes and the U.S. doesn't police the world anymore. Is there any navies? Can anybody think of one? No? Okay, I didn't think so either. So maybe they're building them. Maybe they're going to start building them. So I guess like 5 or 10 or 20 years from now, when some other country builds a big fucking navy and then they can patrol the oceans and stop, you know, quote unquote pirates or evil countries or whatever. Once they can do that and they can protect the oceans and allow peaceful trade amongst the globe, then I guess then I will start to acknowledge all of these fucking retards that are like, oh, the U.S. patrols the world and it's none of their fucking business. Look, I get it. I hate the warmongering. I hate all the bullshit. The base is all over the place. But you have to admit that being able to freely trade between countries over oceans is probably a good thing. And the only fucking reason that is possible is because of the United States and their gigantic navy. So before anybody wishes for a world where that's not the case, maybe just think about, you know, hey, Europe, how's your navy looking? Hey, UK, you got a big old navy that could the free trade and oh no, you don't? Oh, okay. China, how's your navy? What's China gonna do? Fucking ridiculous. So anyway, enough of my rants. There's been just so much people talking about shit that they don't know about lately. It just blows my mind. So on to transportation. Transportation obviously very weak. Broke down from key support, back testing the 382 in green and the macro 236 in blue. Bunch of momentum in its favor. Hard buy signal. You know, basically bouncing off of our descending support line as you would expect. And we'll see quite a bit of that. Next, we have SMH semiconductors. So the VanEck semiconductor ETF, obviously getting rectally destroyed. We did, in fact, get our move down over the last few days, and we hit the 0.5. So very, very nice. Obviously, when we hit the 382, we expected a back test of the 236. That's weird. We were just talking about that on another chart. And then we come back down to the 382. Next target is the 0.5. And then, of course, after we hit the 0.5, we would expect a back test potentially of the 382. So maybe a move back to 201 in the next couple days, weeks, whatever. But the truth is, where are we coming down to? We already know. The pre-Rona high right here. This was right before the Rona struck, and it lines up perfectly with the 618. Seems like a very, very good place for a strong bounce. Potentially a bottom. I don't know. Do you know? Because I don't know. XLU, again, just completely destroyed. Dropped down to our key fill level, broke out of the channel, and now it's trying to hold on to this level. The longer it spends outside of this channel, the more likely it is to see a capitulation event to the downside. And, you know, this little bounce up was great and everything, but look, we sold off to here 2 days ago. We gapped down to here and pumped up to here yesterday, and now we're right back to where we were 2 days ago. So we were talking about, okay, the market can move as much as it wants, but let's see if it's fucking sticky. Does that look sticky to you? The old pump and then give back the entire pump? Yeah. XLP, consumer staples. Again, nice little pump. Seeing a little dump. It is still maintaining above the 8. Trying to carve out some kind of bottom right here. Hard buy signal coming out of the bearish control zone. A couple green histograms in a row. Unfortunately, it pumped all the way up and had all the opportunity in the world to hold this key support level right here, and it didn't. It broke straight back down below it. So maybe it reclaims that level by the end of the day. It doesn't seem likely. Unfortunately, we did not get down to our target for a potential entry. The bottom of the channel, the yellow pre-Rona highs. You know, we bounced the 382 too soon. Bounced the 382 too soon. We bounced the 382 and didn't get down to my entry. That's it. That's the one. No little ballerina skirts. Wasn't that what a tutu? Yeah. So yeah, that's what I'm still expecting us to get down here. Maybe it doesn't happen. Looks like we broke down through support. back tested that support, and now we're getting rejected. We'll see what happens by the end of the day, the end of the week, the end of the year. I'll be there for you. Jesus, please don't ever sing again. All right, so let me jump in chat real quick, and then we'll keep on ripping here. Fabian, what's up, man? Good to see you. Hopefully you are doing well. Milligan in the house. Hey, everyone, he says. What's up, Milligan? Andreas, what's up, Andreas? Good to see you. What's up, Crypto Wrecked City? That's right. It's coming. Fabian says, I really appreciate these streams. Hey, I really appreciate you appreciating the streams. And Todd Schultz says, good morning. Good morning to you, Todd. Good to see you. CW in the house. Hey, what's up, brother? Good mom. I don't get it. Month over month? That's what I think when I hear mom. You could be talking about actual mothers, though, so I'm not sure. So obviously, if you're just tuning in, not financial advice, all that good stuff. So let's look at the DXY. Obviously, DXY has topped again for the 100,000th time, according to everyone but me. So again, we didn't even violate the 21. Here we violated the 21 and reclaimed it. Here we violated the 8 and then reclaimed that. We'll see where this closes by the end of the day, the end of the week, etc. Doesn't look bearish to me. It looks like we're about to get a bull cross in a second here. It looks like basically a bullish reset. We're one candle away from the cycle highs, basically. Okay, that's where we're at right now. We're one candle away from cycle highs. Here, we're in the bullish control zone, and the indicator oscillators, we're at 87. And then here, we're in the neutral zone, about to get a bull cross, and it's at 60. So the indicator oscillator went down by 28 points out of 100, 25% decrease of the entire range, and we're still at the same price. That's literally a bullish reset. Also, we have here, we were basically at 1.25 roughly on the MACD. And now we look over here, and where are we at right now? We're at 0.63. Oh, okay. So we just cut the MACD in half. And where are we at price-wise? Oh, still the highs. Well, no, we're one candle away. Don't exaggerate. Oh, sorry. So obviously DXY stopped and it's going to zero now. And everybody that's been literally wrong for a year, 2 years, or 10 years is suddenly going to miraculously be right. Or I'll just be right again and everybody else will look like fucking morons. So yeah, I mean the weekly, look at what's the weekly doing right now? We're literally at the highest high ever on this cycle. If we close right now, we close a new weekly high. And you're like, yeah, but the rejection and the red. Yeah, but the line and the meh. I mean, it's pure desperation in these markets. I mean, you can listen to Jeremy Siegel crying on CNBC. The Fed's going to ruin everything and they just don't know what they're doing and it's lagging and they don't realize that by the time the blah, 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 blah. Fucking retards. That is a man, a grown man crying because he knows he's fucked. He knows he's fucked. Okay? That is a grown man crying. Basically. Not quite crying, but borderline. Okay? And it's happening all over the place. Kathy Wood's open letter to the Federal Reserve. What I hear when I hear that is crocodile fucking tears. Who cares? Okay? I'm sorry. You can't play your woman card on the Fed. You can't play your you don't understand card on the Fed. You can't play your 5-year time horizon on the Fed. You can't play your nobody gives a fuck that you're a shitty investor. Not even the people whose money you lost. No one cares because you're running a cult. So you can do anything you want to people in a cult. You can give them Kool-Aid and, convince them to self-terminate. That's the beauty of cults, or the downside, depending on how you look at it. So please don't join cults and don't listen to stupid ass fucking charlatans. And if you're not sure who I'm talking about, start with somebody like Kathy Wood, maybe Michael Saylor's a good one too. Yeah, I mean, that's a pretty good baseline, I'd say. So, I mean, DXY on the weekly, getting ready to close a new weekly high. I mean, 7 hours left. Anything could happen. But, I mean, doesn't look bearish right now. Doesn't look like a top right now. Doesn't look like any sustainable rallies are going to be happening while yields and DXY are still making cycle highs. So this is it. Last line of defense before the second to last line of defense, if that makes sense. So we have from the peak in 2001 to the trough from 2008. And then from that point, we have gone absolutely, parabolic, arguably, especially right fucking here when we pick the bottom perfectly. And then since then, off that beautiful bottom, we have literally went straight up in the air. And of course, everybody was saying this was the top, this was the top, this was the top, this was the top. Been wrong the whole way. We blew through the orange 786. We are now at the orange 886. We know the probability of a pivot at an 886 is very, very low. It's less than 5%. So there's a 95% chance that we cruise through the 886 and hit the next resistance, which is that previous cycle high at 120 on the dollar, which has obviously been our target. And then that lines up perfectly with the 618 in red. So somewhere around like 120 is our next target to the upside. Seems very, very high likelihood. When we get there, pray to God for the world's sake that is in fact the top. And then we roll over, at least temporarily. But the truth is, we talked about all the opportunities people had to delever from the dollar along the way. And every time the dollar showed weakness, they never delevered. They just doubled down. So do you think now, if all of a sudden the dollar crashes and goes back down or whatever, people are going to delever, or they're just going to double down on it and then get fucked again? They're just going to do the same fucking thing that didn't work over and over again and continue to get rectal destruction. So you could argue that maybe they like it. Maybe they're into like some kind of like weird masochism type stuff. And that's okay. That's fine. As long as they acknowledge it, you know? But I mean, DXY, strong as fuck. Bullish control zone, Stoch still power for the hand to the upside. All green histograms, blue slope line. The 8 and 21 are bull cross to the upside above the 200 exponential, which has a positive slope. Above the 200 simple, which has a positive slope. Something that we have literally never seen in all of history since this weird time back here in the 1980s, where we saw a massive spike on the DXY. At the same time, we saw a massive spike in rates in a massive bull trend. That's weird. So rates are really going parabolic right now, while the DXY goes parabolic right now. The same exact fucking thing that happened back here in the 1970s, 1980s, which is definitely not what's happening right now, obviously. We got to look at the 1920s or the 1940s. This is completely different. I mean, it's like so ridiculous just listening to all these fucking people. I don't know how so many people with such big microphones, megaphones, voices, whatever, can be so stupid. I would imagine by now, after you lose people a shitload of money, they would give up on you. But I guess they're desperate, so they haven't quite reached capitulation. So Tesla, back down at the 236, back down at the cycle lows, going lower. Obviously, this is key support. When we break down through this support, we have a strong support at the blue 236 from the macro low. 179 is the next target. Remember, we were just over $300, and I said Tesla was getting ready to get wrecked. It was just a matter of time because we were confirming now officially into the bear market. Since then, we've lost 33% in a matter of days. So congratulations to anybody in that short. Next, we have Microsoft. Again, same thing, continuing to get wrecked. We broke down, confirmed into a bear market, back tested a reversion to the mean, went on to put in new cycle lows. See what happens after that. We have some bullish divergence starting to show up, but everything's starting to turn back over. We're below all of our resistances. Looks like the big boys, the old magma, is getting ready for some capitulation. We see Apple had a nice little bounce, right back down, gave away half the move, probably going lower. You know, we're still looking for Apple at this 129 level. Still have the active Apple short going on here. Obviously took some profits at the initial level, the pre-Rona highs, but do expect Apple eventually to make its way down to the 150. Not going to overstay my welcome on this one, though. So we'll see what happens. Google, the G in Magma, Alphabet Inc., that Class A, okay? None of that other bullshit. So back testing the 382. Still just doing exactly what we've been saying, exactly what we said, on its way down here to the 0.5. Google will be at 87 soon. Another $10 haircut, another 10%. Okay. A little bit of that market tax. Meta or Metro, as it's been named. The metaverse is the value of Meta is going to be in the metaverse, but not in the way that old Fuckerberg thought. He thought that it was going to create value in the real world based on the metaverse, but in all actuality, all they're doing is transferring any value that was in the stock into the metaverse. And I don't mean they're transferring it there where it's still valuable. I mean they're like transferring into some bullshit ass 3D universe of immersion that nobody gives a fuck about, that's worth nothing. Congratulations, you get nothing. Meta is trash, obviously. So, I mean, but let's be real. I've been very, very clear about how Meta is a total garbage piece of trash, total shit company and stock way back up here before the capitulation. So don't just think because Meta is down 70% that now I don't like it. No. I always thought it was garbage. You can go back to any of my streams and listen to me talk shit about stupid ass Fuckerberg and his trash bag Meta stock. That is literally a plague on society. Well, not the stock. The stock is whatever. The company is. Amazon is next. So we got the second A in the old magma. Amazon back test the 200 exponential and simple. Finally got that big breakdown. It was holding up really, really nicely for a long time at that 618. This finally broke that level, cleared out the books. We pumped back up, but now there's nothing holding Amazon up. Amazon is getting ready to go back down to $100. And from that 100, we know what happens then. We know what happens then. This is going to look like a clear topping pattern, an inverse, either cup and handle. You know, here's our cup, here's our handle, or possibly we get a bounce and an inverse or a regular head and shoulders. I don't know what it's going to do exactly, but we know the next move to the downside likely takes us back to the pre-Rona lows. No, the Rona lows. The Rona lows, not the pre-Rona lows. The Rona lows. And then obviously, if we do get another leg down, as we anticipated, could take us down potentially as low as like $64. Still a little ways away though. This was like the 2018 low. But keep in mind, the 2018 high, the 2019 high, and then we finally broke through in 2020 right before this capitulation and then went higher. So this is a very, very strong resistance. We would expect that same level to act as very, very strong support. So when we do get down to here, seems more likely that rather than just a cup and handle inverse playing out and breaking down, that we actually do get another bounce back up to around like 124 level and then come down, chop around, and then eventually break. It's going to be very tough to get through this level. The bulls have a nice, strong support here, and Amazon has been staying strong up here at the 618. So when we get down to this level, I think it stays strong as well. So definitely some potential here when it does get down to like 100 or 102, somewhere around there, for a bounce of like 20 or so percent. And you know I will be eyeing that with a little bit of saliva, looking for that juicy trade. All right, let's look at our crypto, aka garbage assets, aka total trash, aka the scam coins. All right, so Bitcoin. So again, sold off pretty violently. Everybody was like, oh, it's going to zero. And then we pumped up here and everybody's like, oh, it's going to 100,000. And now it's looking like a pretty aggressive rejection of the 8 and 21. And the best way to not get tricked every time something like that happens is create a system. Or you can just use my system for absolutely free because I literally describe it in videos. And then you can just use something that already works and it doesn't cost you anything. And, you know, if you want to pay it forward, by all means, you can. If you don't, you don't have to. That's the beauty of the free shit. So anyway, we know that in order to have a rally, we need the 8 and 21 to cross green. Sometimes it fails. Other times it fails again. Well, we didn't even come close to that. So anybody that jumped the gun right here got what they deserve. We do have a blue slope line on the TDMACD. It's worth paying attention to. We did just get a hard sell though. We do have 2 green histograms and we're above that slope line. We're about at the zero line. There is potential. This could go either way. Now, the problem is when you've been consolidating a range for this long, the indicator oscillators become much less reliable. So that's probably what's happening right now. They're much, much less reliable after being going sideways for this long. But really, what really happened, sorry, I just had to extend that a little bit. Nothing. What did I say? We've been trading in this range. We're going to continue trading in this range. When we get to the bottom of the range, you can buy support. When we get to the top of the range, we can sell resistance. When we get to the heart line, we could do, you know, take profits on a long, or potentially if we break through it and then find support, we can reload for a potential long again. But all we did was just fake break down and then come back up and find support. Or it doesn't even have to be a fake out. Like it was intentional. There's a battle taking place. A bunch of people are buying. A bunch of other people are selling. And then eventually the buyers won. Not that big of a deal. Not that big of a deal. And where are we at right now? Still inside the range. The same range that we've been trading inside of since June of 2022. So if you're like, oh, I'm afraid I'm going to miss Bitcoin's price action. I don't know what to do. Should I buy now? Should I wait? What do I do? Should I sell? Oh my God. It's too crazy and I don't know what to do. Well, how about this? How about if we break out of the range, you can do something. Until then, who gives a fuck? Break out of the range to the upside, above 24K, big fucking deal. We break out of the range to the downside, below 18.9, 19K, or maybe if you want to go by daily closes, we could say 18.455, or if you want to go by wicks, we could say 17.554, whatever. Whatever you pick for your range. You want to pick the ascending support line here in green? That's fine. You can pick that too. Pick whatever you want. But just know, hey, if we break down from these levels and start closing, we're probably going to go much lower to like 14, 16,000, something like that. Maybe 10, maybe $80. I don't know what Bitcoin's going to be worth. If we rally up to the upside, I mean, we're probably going to run into resistance at about 24,500. If we break through that, then we can start talking about 28,000, 32,000, etc. But until then, nothing has changed. And this isn't some impressive fucking candle to like write home about. It's like, oh, sure, yeah, it's good. It got bought up. We rejected lower prices. Congratulations. Here we rejected higher prices. Nobody was like, Bitcoin's going to zero. Oh my God, it's garbage now. It's no longer worth anything. Fuck crypto, it's dead. Nobody said that right here. So why is everybody like, oh, this is the bottom right here? It makes no sense. Nobody was calling for the top here. Well, I'll take it back. There was one man on planet Earth in the private trading group that can be 100% verified that literally said in real time, I'm selling all of my crypto into the $25,000 pump because this is the top. And then like it went up like $7 more after that and then crashed. So we got lucky again. Sold the absolute top again. Sold the absolute top again. So if you want to get lucky, just stick around. And eventually it just sort of happens, I guess. So if we just zoom out here and look at the big boy chart on the weekly, we know we're below the 200s. We've never done that before. We have never consolidated below the 200 simple. The Bitcoin chart has never looked this bad. Crypto has never been this garbage, this trash, this just horrible in existence, just a plague on humankind. Not necessarily like Bitcoin and Ethereum, but the other like 99%, pretty much. So yeah, total shit, total garbage, bearish control zone, couple green histograms, that's good, I guess. Below all the moving averages. Consolidating at the lows. Just get ready for the trapdoor. One of these days, okay, we're gonna fire up the old streaming software and we're gonna jump on here, and then you know what's gonna happen? The trapdoor is gonna have initiated. We're gonna be at like 16,500, potentially on our way to 14,000 or 10,000 or whatever, and we're gonna get on here. And I'm going to pretend like I never warned everybody about the trapdoor. Okay? It's going to be the one time where I'm not like, I told you so. No, that'll never happen. I'll literally be like, it'll be like a thumbnail of a trapdoor. And I'll be like, see? But it's just a matter of time. I mean, maybe I'm completely wrong. And we'll just go to 70,000 instead. So, sure. All red histograms, red slope line, below the zero line. Bearish control zone, below the 8, below the 21. They're bear cross. We're at the lows. We just closed the lowest low of the entire cycle on the monthly. And there's one candle. This little guy right here. This dude right here. This candle from November of 2020 is literally holding up the entire crypto market. That candle right there. That and Sam Bankman-Fried's desperation to try to save the crypto space. The two of those. So that's it. So if you're going to pray to some weird ass God or something like that, some crypto God or Bitcoin God or Michael Saylor or whoever it is these weird fucking cult people worship, pray to this candle. Pray to this candle. God, please grant the November 2020 candle strength, that it could lift up the price of Bitcoin, that it could carry the weight of the entire crypto market on its shoulders. And God of all gods, please continue to hold strong, prop it up when it needs it, and eventually perhaps we can get through this bear market. But please hold up this green candle, because if it fails, crypto's going to 14K. So just pray to this candle. Pray to that candle right there. That's the one. Okay? Don't pray to Mikey Saylor. Don't pray to Kathy Wood. Kathy wouldn't want to be you. Pray to that candle right there, because your God can't help you now. So yeah, Bitcoin looking strong to the downside. Ethereum obviously looks like shit. Still looks better than Bitcoin. So we saw this exact pattern on Amazon, right before the capitulation move. Ethereum hasn't had the capitulation move yet. It did have a low wick right here. So it's just clearing out the books before, if we do get continuation, there's that many less buy orders now, static sitting on the books. We did find support at that key level again. We're still watching the top of this channel right here. As long as this is holding, it's okay. The longer we go sideways for, the worse it looks though. But technically, there's still an argument to be made for a 1, a 2, a 3, a 4, and then a fifth wave up. Technically. Do I think that's going to happen? No. But technically, it could still happen. It has not violated key levels, which is good. So the Ethereum cult is praying. The Bitcoin cult better pray too. So far, so good. Well, so far, still alive. Barely. Total crypto market cap. So Bitcoin tried to push up on that pump, got rejected, still below the 8 and the 21, so doesn't look great. So obviously you can tell by the Bitcoin dominant or total crypto market cap chart that we had a pretty aggressive sell-off, a pretty aggressive pump, and now where are we at? Right fucking back where we were. So there's no new money flowed into crypto. There's no additional wealth that was created in crypto. There's nothing that has changed technically on this chart. We're still below all the moving averages, and it still looks like shit. We do have a blue slope line, so that's good. Total trash. Just totally looks like trash. We flip over to the weekly. We broke down below 200 simple, and it's almost flat. At this point in time, it's very, very close to flipping red and confirming into a bear market for the first time ever. All green histograms. Stoch's trending up. Now we're getting a hard sell signal, and the price action has gone sideways. It's literally a bearish reset before the trapdoor. Bitcoin dominance. Sorry, should have been on the weekly. I know, it's crazy. You're like, oh, these charts are all fucked up. What's going on? I know. I reset my computer for once. It's crazy. I updated some stuff and everything. It was pretty wild. Fuckers. Bitcoin dominance on the weekly. So this is the full Bitcoin dominance chart. I don't think any of these are any good anymore. Bitcoin dominance chart, trying to put some strength in, getting back above the 8, retesting the 21. It does look like it's trying to build some strength to the upside. It's had a bunch of momentum. It's retested the lows since the slope line flipped blue. It's trying to reclaim those levels. It's at the 0 line. We're basically at a bunch of resistance, have a little bit of momentum in our favor. So it looks like Bitcoin is trying to gain momentum compared to altcoins. And then if we just go to the weekly on our the special Bitcoin dominance chart, this one just takes out the stable coins. So it's just Bitcoin versus all of the shit coins, no stable coins. And the idea being obviously to remove people that are just speculating on dollars or not speculating at all, just sitting in dollars. The truth is Bitcoin looks very strong on this chart. So the thing that makes Bitcoin look weak comparatively to the crypto market is the amount of money in stablecoins, not the amount of money in shitcoins. So the truth is, altcoins right now are garbage. They're garbage. They're losing value consistently compared to Bitcoin and compared to stablecoins. So the choices people are making right now is, hey, Solana is total trash garbage and it's probably going to go to 0 or close to it. Hey, Cumrocket is a total scam, and obviously that's it. There's no other stuff. Full stop, obviously. All, et cetera, et cetera, et cetera. So people are leaving their shit coins. Okay, they're leaving their cults. Okay, they're quitting the XRP army or the XRP cult or the Cardano. What are they called? Cardano boys or Cardano beads? I can't remember what their group is called. But like the Cardano cult is starting to break up, and they're selling their shit assets, and then they're moving into either Bitcoin or stablecoins. And that doesn't bode well for shitty altcoins or good altcoins. All right, so on to the next. Oh, good morn. My bad, CW. From where I'm sitting and the angle, it looks like it says good mom. But now, in hindsight, it makes a lot more sense that it says good morn, M-O-R-N. But the R-N looks like an M. So, good momming to you as well, my friend. And obviously, if you're just tuning in, This is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we got a couple more to look at today, and then we'll take some requests as long as we're making good time. But I do want to keep this one relatively short for our wrap up. So gold looking very, very weak. What is gold telling us? Gold is telling us, hey, this weakness we saw in the dollar, and well, we didn't really see any weakness in yields, but the weakness we saw in the dollar, gold didn't trust it. Why didn't gold trust it? Well, because gold is not a sucker. Okay, gold is slow and purposeful. So when we see a little sell off in the dollar and a little rally in assets, and then gold doesn't move up or continues to go lower, that tells us, hey, somebody's lying, and it's probably not going to be gold. It's probably not going to be the most reliable indicator we have for like, you know, the last like 2 to 10,000 years, depending on what civilization you're part of. So gold looks like shit, still looks like shit, likely going to new lows. You guys know, obviously my target is 15, like 96 or whatever, and then we'll see what happens when we get there. Silver, obviously complete trash, complete fucking trash. So exactly like we talked about, the difference between something pumping, okay, like a 2-pump chump, and something being sticky, okay. Anybody can get a nut, not everybody can get their partner to nut, if you know what I'm saying. And silver ain't getting nobody to nut. This thing is trash, complete garbage, exactly as expected, as predicted. And just like I said, the support line, the breakout, the double trouble support didn't hold. We're breaking down to it. And now look, we're almost already at new lows already. We've been expecting teens forever. We made it to 17. If we drop through this level, which is going to take some time, we're not just going to fall through 17 overnight. But if we do, we know where the target is. Okay. If silver goes so low that it's not even, I mean, when it was 30, it sounded crazy that I was like, silver's going to be a teenager soon, so get ready. And then when we hit 19, it was like, oh, I told you so. Well, look, it's going to get even bolder. You're not going to like it. Same way people don't like that 7% potential Fed funds rate. You know, and then all of a sudden when we're at 5, it's like, oh, actually, it's kind of believable. Well, silver at not in the teens anymore. And I'm not talking about because it goes back to 20. I'm talking about because it goes to 12. And you're like, silver will never go to 12%. Fuck you. It'll never go to 12 unless the technicals play out. And if it does go to 12, that actually doesn't even violate the big picture because we have a low right here. So we're not even technically putting in a lower low. So maybe it does go to 12. We find exact support at 12. And then when we zoom out, I know I'm always mean to silver because the chart is trash. And, you know, most of the people that like silver are trash and it's fun to be mean to them. But that being said, you know, I won't bully silver for like the next 30 seconds. Somebody time me. I can't promise that. I'm going to try for 30 seconds of positivity on silver. Okay, silver topped back here in 1979, and then it double topped again at $50 in 2011. And it put in the giant cup. Okay, the biggest cup known to man. Right here. And then we put a descending channel. And then when we broke out of the channel, we back tested it, found support, and started to put in a rounding pattern, which is a textbook cup. The descending channel is the beginning of the handle. The breakout of the handle, aka the channel right here, slowly leads us back up to that high again. Now, in the meantime, what we're filling out is this cup right here. I'm sweating, trying not to be mean. I hope you guys appreciate this. We're basically trying to form a bottom right here at this level. So it's not crazy to think we could actually go lower. I mean, this is, you know, this isn't a crazy, like, specific rounding bottom that makes the handle right here. But the idea being, we have a low right here. We basically put in a low right here with the extra little wick on top. Not crazy to think we come down here and retest around this level one more time. But we still slowly just kind of form out this rounding support. And then eventually, one day, possibly, maybe, there's a chance in 2027, according to this very, very inaccurate random drawing that I put on here just one day. Exactly Monday the 1st of November, 2027, to the day, give or take a few years, we will break through $47, maybe, and go to new all-time highs. And the measure move for said all-time highs will potentially take us up to $90. The 1.236 Fibonacci extension for the entire range of silver, as well as the measure move from the cup and handle. $93 silver. And you're like, that's it? 93 fucking dollars? And then after that, it'll go to a gazillion. Is that better? All right, you're welcome. So as long as this chart is accurate and we break out at or around 2027, and then after that, from the breakout at $50, we go up another roughly, whatever, 80% up to $90. It's worth it, right? 5 years to double from, it's only at 20 right now, so could be good, right? It's like a 5x. But yeah, honestly, silver probably goes to zero. GSCI commodity index looking weak. This is not what we want to see. When we saw some strength right here, we wanted to put in a higher high right here. We didn't. So we have a high, we have a low, we have a lower high, we have a lower low, we have another potential lower high. We're consolidating between the moving averages. If we lose the 200 exponential, we're likely going back down to retest the lows at about $20 and probably put in new lows. Stochastic momentum rolling over. Histogram momentum, you could say it's kind of rolling over. It's definitely not looking great right now. We're still fighting to see who's going to win, the Bulls or the Bears, but it doesn't look great right now. So LNG. So we talked about this potential, whatever you want to call it, double, triple top right here, this little clusterfuck of toppiness, whatever you want to call it. We did put in a super aggressive candle back to that wick right there, and now here we're basically like all but bearish engulfing that same candle. So how much of the moves from yesterday were sticky? Oh, I'm sorry, exactly 0.00%, exactly as predicted, as expected, as discussed. Big surprise. So regardless if there were moves up or moves down, everything is like right fucking back where it started. So who gives a shit? So if you got squeezed out, congratulations. You either learned a lesson or you just lost money for no reason. So I highly recommend that you learn the lesson. And then it's not so bad. You can lose money, but learn a lesson, and it's like paying tuition. You pay a bunch of money to go to college or whatever to learn shit. So it's okay to lose some money trading as long as you learn shit. If you just consistently lose money doing the same thing trading, just hit me up. I can help you out. I can save you a ton of work. You can just mail all your money straight to me, and then you don't even have to trade anymore. You can just lose it all in one go. And I promise I'll take good care of it for you. So yeah, LNG, got to be careful. This is definitely putting in consistent, potential / confirmed bearish divergence. So got to be real careful here. Typically when most people don't use a trader's dynamic MACD, they use a regular MACD. So sometimes it's not as reliable because other people aren't going to see it because it completely changes how the MACD looks. But essentially gives you the same information. It just gives it to you in a different way and allows for essentially the blue and red slope lines, how I have them, so that we can essentially use it more for like consistent trend. Because a lot of times what happens in MACD is you get a lot of false signals. The idea of the trader's dynamic MACD is you don't get nearly as many false signals. So when you do get the TDMACD showing you something like a bearish divergence right here that might not be showing up on other indicator oscillators or other MACDs, etc., it's worth paying attention to. Because at this point in time, we have 1 peak, 2 peaks, 3 peaks, each higher than the previous. We have 1 peak, 2 peaks, 3 peaks, each lower than the previous. So if we get a second red histogram right here on the daily, like Monday or whatever, we'll have confirmed triple bearish divergence on the TD MACD. But we won't have it on the Jewel Thief, on the stochastics. Now, if you ignore this point right here and you just go from here to here, sure, you could cherry pick. Am I like, that's bullshit, you can't do that? Yeah, sometimes you can, but you really can't cherry pick that, honestly, in my opinion. So got to be careful. It looks very, very toppy to me. It looks like some distribution taking place. MOS, Mosaic, just looking at some fertilizer. Again, just massive bearish engulfing candle. Oh, look, it wasn't sticky. Oh, that's crazy. Still below 200s. They look like they're ready to roll over. Still hanging on kind of around the pre-Rona dump right here. Oh, no, I'm sorry. Because it's yellow, I psyched myself out. That's not the pre-Rona highs. That is the macro fib. So still hanging out at the 236 macro fib. We know if we break down from this, the next support level is 43. And then after that, we're talking about like low 30s. So still got a ways to go before that happens. But we're starting to see signs of consistent lower high, and then it looks like we're getting ready to threaten the lows. So I would be expecting anything that has a high, a low, and then a lower high, and is coming down, I would be expecting a lower low. 100%. All right, so URNM, uranium ETF. This one's miners. You look at any of the uranium stocks, with the exception of Cameco, pretty much all look the same or very, very similar. Some substantial weakness coming through here. We are confirming into the bear market. We are confirming another in a series of lower highs, another in a series of lower lows, and likely headed down here to new lows. So I do expect this to be around $50 very soon. We also have this textbook head and shoulders pattern, beautifully played out. Matter of fact, we drew it so far in advance, and it did exactly what we said. We didn't have to move anything. And now here we are back down testing the neckline. Seems likely if we break through the neckline, we get the measure move. Takes us down to the macro 382, the bottom of the descending channel, and then obviously our measure move around the area as well. That's our green box area. We'll be looking to reload up for a short-term scalp. Obviously now we are confirmed in a bear market. So any moves to the upside, we expect to underperform. Any moves to the downside, we expect to overperform. There's a strong case to be made at this point in time, for a short position from this level. But the truth is, right now, the reason I'm not inclined to take a short on something like this is when I look at this pattern, we basically have a couple things going on here. Where essentially the most important thing for a trade setup, in my opinion, is we're in a descending channel. And we're at the heart line. So we know we're basically equidistant from the bottom of the channel and the top of the channel. So from support and from resistance. So if we're going to take a long, we want to take the long to resistance. If we're going to take a short, we want to take the short to support. So even while I'm biased and inclined that we're going to the downside, the risk reward ratio is going to be like 1-to-1 based on if we go break out or test resistance versus test of support. Now, arguably, you could use something like the 236 as your stop loss. You could run a super tight stop loss on this. So we just take the entry basically as the candle we're currently at right now. Take the stop loss slightly above the 236. So that's roughly like 6%. And then we take the move to the downside. And, again, we don't want to get too crazy with it. We call it the 382. We call it the bottom of the channel. We call it a slightly underperformance of the measure move. And that gives us 20% downside, 6% stop loss, 3.3-to-1 risk reward ratio while we're in a bear market. So we need at least a 2-to-1 risk reward ratio because we're trading with the trend. In this case, we have a 3-to-1 risk reward ratio. So this would be a viable and acceptable trade. Now, wouldn't be surprising if this just popped up here and closed a new daily high and then, stopped us out. Arguably, you could use the 200s and still have a semi-favorable trade. You're talking about 11% stop loss then and 20.5% downside. So it's less than 2-to-1. So it's technically not an acceptable trade if you do that. So somewhere in between there, there's a viable trade or whatever. I have not shorted these uranium stocks. That's a tough one for me. I typically don't like to short things that I macro believe in. At least for extended periods of time, but occasionally when the situation presents itself, like the Apple short or the Tesla short or something like that, that's different. This isn't like some amazing opportunity in my opinion right now on these uranium stocks, so I'm inclined to just wait for the potential long and then look for a better play off that. But again, trading with the trend, you're going to win more than you lose. So if you got a good risk reward ratio, fuck it. Fuck it. CCJ, Cameco. So yeah, this was our liar pants on fire, and it was in fact exposed as expected. Eventually someone is not telling the truth, and eventually everybody else's stories line up but the liar, and it's easy to figure out who done it in the knife with the candelabra or something like that. So yeah, at this support, putting in a higher low for now. We know what's going to happen. The parabola is getting weaker. It's getting weaker. It's getting weaker. And now it's almost flat. If we come down here to the 0, it will be officially flat. We actually don't need this fib anymore. So I'm going to get that out of here. But we know if we come down to this level, that's a very, very important support level. And if we break through that support level, we're likely to see some sort of capitulation type event. Nothing too crazy, but from maybe 21 to 17 and then, potentially 13 from there. It's been holding up very good. So when it lets go, it's probably going to overperform to the downside or underperform to the not losing all your money. So yeah, CCJ. Again, I'm still very, very bullish on uranium stocks, on nuclear energy and everything going far into the future. I know people get mad when I say anything bad about uranium or crypto or literally like anything. Just don't be in a cult. Just do not be in a cult and understand sometimes good assets that have long-term potential will do bad things. And right now, uranium is a bad, bad boy. Bad, bad boy. Confirming the bear market. We'll see what happens. It did it a couple times before and didn't quite get sticky, but now it looks very weak. So Tilray, onto our pot stocks. So we saw a little bounce back up, retesting the lows right here. I mean, it looks terrible. It's back on top of the 8 and 21. That's good. It's back on top of the red slope line. That's good. Coming out of the bearish control zone. Positive slopes. Stokes. That's good. Still getting ready to surge up to $5. Is it getting ready for like a 50% move? It might be. It might be. I really wish it would have just come down here and tagged our target. It'd be like much more reliable. This one could go either way. I think if this closes the weekly above the 821, it starts to look like there's going to be some kind of follow through. Even if it leads to an eventual rejection, there may be at least a scalp in play there. Tilray has been pretty good up until this one about nice scalps. What, go to 370 would be a retest of the 21 on the weekly. Seems like if we get a decent push up on Tilray, it's probably going to go to $5. Seems very, very likely. Lots of confluence around that level. So depending on how this weekly closes, if it closes right here, it's probably going to, we're closing basically at or above the 8, which means we likely retest the 21. If we retest the 21, we'd likely retest the green 786. So there probably is a scalp in pot stocks. Tilray in specific. We look at some of the other ones as well. It's building momentum on the weekly. Blue histograms. This is one thing I really like to see from the TDMACD. I don't talk about it a ton, but this is one of like my favorite things to see is when we come down, put in like a low on price action, a couple green histograms, the slope line flips blue, and then we go down again and put in a new low. But we still have blue slope. We're still above it. So you're like, oh, that's the low. We're starting to build momentum. Everything's good. TDMACD is telling us momentum to the upside. We're about to enter into one of these, beautiful long trends like this where we're able to capitalize on, tens or hundreds of percentage moves. And then all of a sudden, suddenly, we put in a new low and everybody's like, oh shit, stop losses are getting hit. People are capitulating. That's good. I like that. That is typically a very reliable signal for continuation. Assuming we can start doing anything bullishly. So I do like how Tilray is setting up. I do like pot stocks here. The closer we get to midterms, the more potential there is. You never know when the Biden staffer, resident, what do they call it? Token buddy, tweets out something new. So if you want to play the tweet game, but you're not a Trump fan, just play the Biden White House pot stock tweet game. All right, that's all our assets for today. Markets, obviously, they're really turning around, and suddenly this move looks sticky. No, actually, it just looks like exactly what I said. So, DXY looks strong. Obviously, getting back up here to new highs is going to be a big deal. TNX at the highs. U.S. oil continuing to sell back off, looking like a very clear rejection. Dow Jones showing some weakness. S&P, all of them. So, nothing has changed. We're just doing exactly what we said. So, like the one day before, maybe after the big reveal from the Fed, maybe just don't make any like rash decisions, either bullish or bearish. All right, so that's it. We did it. Friday. Happy Friday, everybody. Hopefully everybody's excited for the weekend. Ready to enjoy themselves. It's been a crazy week in the markets. Not a ton of really anything took place, to tell you the truth. So we'll see what's going to happen. I think we're really setting up for another big move. If I'm wrong, it's going to be a big move to the upside. We're going to be able to capitalize that and make a lot of money. If I'm right, it's going to be a big move to the downside, and then we should be able to capitalize and make a lot of money. So regardless of direction, I care not. Obviously, life is a lot easier when everything's just going up, but that does not seem like the situation. That is not the current market condition. So that being said, we should be looking for opportunity to get in, get off, get out. Just get that nut, lock in those gains, and get out. We do not want to be holding in a downtrend. But you guys already know that. So Fabian says, thank you for the stream, brother. Yes, sir. Thank you for the interactions as well, my friend. Appreciate you guys. Thank you to all the group members for making the Friday stream possible. I literally wouldn't be doing it without you guys. So yeah, thank them. If you're not currently a group member, if you want to become a group member, you can reach out to me, blah, blah, blah. Insert generic spiel here, access to indicators and group, blah, blah, blah. And then what else? So yeah, going to be a big weekend. Could see some volatility in crypto. Definitely expecting 75 basis point hike, expecting rates and DXY to continue strengthening, expecting trends to just continue doing what they've been doing, with the exception of a couple who are basically just deciding right now. Some of the real strong performers in 2022 are now trying to hold on to those precious bull markets. And whether or not they do, there's going to be some opportunity, but the real opportunity is going to be in wherever the next bull market is, wherever the next strength is. And right now, I really don't see it. I thought we might see gold and silver miners this year do well. We're almost at the end of the year, and they have done terribly well. So good thing we didn't jump the gun on those and just get wrecked like all the little cult members did. Same thing with pot stocks. I really thought there was some potential for, basically like the whole green agenda, well, different green agenda. The one where they federally decriminalize marijuana to buy votes. Seemed like very high likelihood. Also seems like a really good place if you're a current administration or previous administration and you're running 500 billion to 1, 2, $3 trillion deficits. Seems like it might be an intelligent idea to not only legalize, regulate, but also tax something like cannabis, like many states have done and have made billions of dollars in tax revenue. So I would think that would be a good idea. But the truth is, the Biden administration always makes the worst decision first and then eventually, reverses it. So probably they will make pot more illegal or something like that and then eventually come around. I don't know. I don't know. It's hard to believe they could do anything worse than they're already doing it. But somehow they amaze us every single day. And again, this is not because I love Republicans and I hate Democrats. They all fucking suck. They're all terrible. Central bankers, politicians, they're all scum with the exception of the handful of decent human beings that I can count on one hand, some of which are Democrats, some of which are Republicans, and some of which are, I'll leave it at Democrats and Republicans. I guess you could say independents. Arguably, I have many libertarian views. I would say I'm somewhere in between a probably libertarian and conservative. But also, there's a lot of stuff that Democrats get behind that I actually do believe in. Well, when I say a lot, I mean like two things. So, but that's it. Don't mean to get all political with you guys, but it just blows my mind some of the decisions that these various administrations make. And I suspect that we're going to start to see some potential changes in the future. It might be painful for a couple of years or whatever, but theoretically in the future will be better than it is now. I do trust in human beings and their ingenuity. I trust us not to have a nuclear war and to have a future that's better than our current existence. Now, am I just super optimistic and ignorant? Well, you could argue that. There's probably about a 20 to 25% chance that I'm wrong on nuclear war. So I guess I'm being an optimist. But that being said, I guess we'll wrap it up there. We'll be back on Sunday night for our market look ahead every Sunday and Wednesday, 8 p.m. till about 10 p.m. Trying to cut them a little shorter lately. And then, of course, on Fridays for our market wrap-up, 11 a.m. till about 12:30. But that's it for today. Obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Before I go, let me read these last couple of comments. Eli says, To your point, Dems would have been in better shape focusing on cannabis instead of fighting a losing battle on abortion. Dude, I could not agree with you more, Eli. I agree 100%. Abortion is like a 50-50 issue. And the problem is, for the Democrats, from their standpoint, and this is obvious, the majority of the people that are pro-choice are Democrats. So you're like doubling down on something that already the people that agree with you are for. So if you have 50% and then you're like, oh, now we're able to convert 10% of those people who are like super strong advocates for like my body, my choice when it's abortion, but not when it's vaccines. But that's a whole nother issue. So what are you doing? You have 50% of the population. You're going to convert 10% of those people. So you have 5% extra swing, as opposed to something like cannabis is supported by like between 70 and 90% of people. Like, I'm not saying it should be just straight up legal and little kids can walk into a gas station, and buy pot. Like, I don't want an entire generation of stoner retards. No offense. And just because you're a stoner doesn't mean you're a retard. Just because you're a retard doesn't mean you're a stoner. But if you start smoking pot when you're in your like teens or preteens, you're probably going to turn into a stoner retard. No offense. But the truth is, you're talking about 70 to 90% and the ability to convert Republicans and Democrats and neutral people or people that don't even give a fuck, that just care about pot. Or maybe they don't even smoke pot, but they have a business that has to do with it. There's so many more reasons that should have been the big focus. But instead, the Biden administration just fucks everything up. They're like trying to go so hard on abortion. And like, I don't really know anybody that's not an extremist, and not in a bad way. Like, well, I'm not using it in a bad way. It doesn't mean it's good to be an extremist. I don't know anybody that isn't like a hardcore, like full on, like libtard, like my body, my choice, woman's rights, blah, 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 blah. Or the complete opposite, where they're like, oh, killing babies is wrong, zero abortion. I don't care if you're like one day after, even the morning after pills. Like, the two extremes are the people that are probably like going to vote one way or the other based on abortion. And they've already made up their fucking minds a long time ago based on everything else. So abortion is the worst issue that you could base anything on. It's terrible. And I mean, I've made the point multiple times. The truth of the matter is, who gives a fuck about what the issue is? I don't care if we're talking about pot. I don't care if we're talking about abortion. I don't care if we're talking about, sex with aliens. Like, whatever the issue is, I don't care what it is, how ridiculous or how much it affects everyone's daily life. The answer is, say it with me now, less federal government. I don't give a fuck what it is. Okay? Less federal government. You know what? You could even shorten that statement too. We could simplify it. And we could just say, less government. That's good. That's even better. But definitely less federal government. So with that, I'm going to go ahead and wrap it up. Eli says, Trump only spent the entire team seating the court system, entire term seating the court system with conservative judges. Could have seen it coming a mile away. Yeah, it was obvious. They said it like literally like years in advance that was their plan. 100% for or against abortion, not something we should leave up to the federal government. Not at all. And as fucked up as it is, to say to people like, oh, if you don't like it, move to a different state where it's legal. And they're like, well, I live in the state and my family live in the state and I'm from the state. Well, then you don't give a shit about whatever it is you're saying. You either care enough to move to a different state over whatever this issue is, or you don't. And that's up to you because you have the option. But when you have federally something is illegal or regulated or whatever, you can't, what are you going to just renounce your fucking citizenship and go live in another country now? I mean, you don't have the same ability to move to where other people that have the same goals as you align. Like, if you're not a conservative, you're probably not going to love your life, in a conservative area. You're probably going to be like, oh, these fucking people all the time. The same way, if you're a full on like libtard, you're probably not going to love living around a bunch of like old boomer conservatives. It's just not going to happen. So just live by people that have the same values as you. Live in states that have the same laws as you're aligned with. It makes exponentially more sense than trying to make everyone conform to whatever your ideology is. Whether it's correct, whether it's fucking retarded or not. If you want to go live in a place that doesn't use nuclear power, sure, go live in a state without nuclear power. But the rest of the the rest of the country should be able to use it. You want to live in a place without, pot. You want to live in a place where abortion's illegal. You want to live in a place where, by all means, just go fucking do it. But don't try to force everyone else to have the same views as you, especially on these issues that are 50%. I mean, abortion is like a 50-50 right down the middle. I mean, it's crazy. It blows my mind. But, hey, I'm not some political strategist or whatever. I just use common sense. So, obviously, that's where I diverge greatly from, all the politicians. So, but that's it. Okay, we're going to go ahead and wrap it up there. Everybody have a great weekend. Obviously, none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Just keep in mind the difference between a move and a sticky move. Okay, and until we start seeing actual sticky moves, let's not start calling for tops and bottoms. That's it for today, Crypto Trend Trader. Have a great weekend. Appreciate everybody tuning in. Thank you for all the interactions, the comments. Make sure to like and subscribe.